Hello and welcome. You're watching Closing Trades here on ET Now, and softer day for markets as we go about. We've seen around a cut of around 1/3% thereabouts on the index. And in terms of the top losers, let me quickly pull out some stocks for you which are buzzing in trade. Of course, there's weakness, and the India VIX is largely flat. But when you're looking at the Nifty 50, there are a few gainers and losers. The gainers are Kotak Mahindra Bank, 3.5% move on Kotak. HDFC Life up 2.5%. Axis Bank up 1.5%. And Ultratech 1.25% higher. Really, those are some of the stocks which are buzzing. Infi is up 2%. Infi is down 2%, I beg your pardon. Tech Mahindra also down 2+%. Shriram Finance, Wipro, some weakness coming into some of the IT names especially. And the Nifty IT index is down 1.5% in trade today as a result of that. What you're seeing is some of the heavyweights punching well below their weight. 2% lower on some of the heavyweights. Tech Mahindra, Infi leading that. Wipro, Emphasis are the other two. HCL Tech is down 1.3% as well. And TCS is also down over 1%. There is Oracle, which is up around 0.5%. That's the only one from within the IT pack which is in the green, at least at this point in time. When you're looking at the sectoral mix, the bias continues to be PSU banks. They've been gaining, and the top sectoral gainer since the morning, 0.9% higher. And even within the PSU banks, you're seeing the broader or the smaller banks doing much better. A UCO, a Union are just some of the ones which are actually doing relatively better from within the PSU banking pack. There you go. A Union is in fact cooled off from the highs. Let me pull out so Bank of Maharashtra, an Indian bank, a Bank of Baroda are just some of the ones which are standing out, all gaining over 1%. In fact, Bank of Maharashtra up 4%. That was on your screen just a minute or two back. When you're seeing the Nifty IT, it's the top sectoral loser, but along with it, FMCG is down, so is consumption, and the Realty index is also seeing some softness, so 0.25% lower. Auto is down around 0.5% thereabouts. The Nifty Bank is up 0.2%, so that one showing some bit of resilience, led by Kotak and some of the private sector banking names. 0.5% higher on the metal index, and you're also seeing some good gains coming in, some smart gains on defense and pharma. But are we here with some of the stocks that are buzzing in trade today?
So let's have a look at some of the stocks that are buzzing in trade, starting off from Cyient, which had its investor day, and the management has given some very strong guidance, with the management guiding that for FY28 and 29, they will be doing EBIT margins of 15% plus, and the order intake to grow at double digit, and the industry growth, revenue growth to also be ahead of the industry peers. For FY31, they envision to have EBIT margins ahead of the industry at 16%. For the semiconductor standalone business, they have guided that the top line will grow 4 times with 40% gross margins and 20% EBIT margins. And that is the reason this stock, which is Cyient, is up by 5 to 6%. Up next is Grow, where a block deal has taken place with Rebit Capital selling a 1.6% stake at 195 rupees per share. The deal was worth around 1900 crore rupees, and that is the reason the stock is under some pressure. Up next is Ather Energy Transition. The stock has the company has received a 135 crore rupees turnkey domestic order from Madhya Pradesh Power Transmission Company, and as you can see, the stock is about 3.5% plus on back of this order win, with also the management giving some very strong guidance and raising their guidance from 40% to up to 50-55% on the top line basis. Up next is Ather Energy. We had seen some time back that their already existing investor, Hero MotoCorp's board, had approved an additional 1,000 crore rupees investment, and now the deal has finalized with 960 crore rupees of investment, and Hero Moto has now paid the 25% upfront payment required in the warrants for Ather Energy. So that is the reason the stock is up around 2.5%. Up next is JK Enterprises, as there is a right issue news in the company, with the board proposing up to 155 crore rupees of fundraise with 3 new shares for every 19 shares held at 75 rupees per share. The funds will be utilized for their JK Defense and Aerospace and for a manufacturing facility along with a loan repayment. There is also an order win for JK Enterprise worth 60 crore rupees for BrahMos Aerospace and Manufacturing and supplying composite parts for the BrahMos missile. So these were the stocks that were buzzing in trade, names like Cyient, JK Enterprises and Ather Energy.
Okay, so some of those being the buzzers of today, but let me bring on board Kunal Bothra as well to try and give us a perspective as to how he's seeing markets. Kunal, crude prices have cooled off. Firstly, very good afternoon. Crude prices have cooled off, and despite that, we're not seeing any strength in our markets. And yesterday, at least at the fag end, there was some strength which was visible that's been sold into actually.
Yeah, good afternoon, Harsh.
Good
It's a
afternoon.
little strange to see the market's reaction today because the Nifty on one hand is down 60, 70 points. Bank Nifty surprisingly is up 300 plus points, 400 points approximately. And I think we maintained this 350, 400 points throughout the day for the Bank Nifty. So largely, I think it indicates that maybe the market breadth across the Nifty 50 is not as powerful as compared to the Bank Nifty. Maybe I think some bit of it could be contributed because of the premium which was there for the index futures yesterday, or the excessive premium rather which was there for the index futures yesterday. We were almost at 185, 180 points on the index premium yesterday. We've now cooled off into 160, 65 points. That's I think some bit of contribution from that aspect. But largely, I would believe that 24,200, 300 is where we are fluctuating into. It's just that the advanced decline ratio is not as strong as we would have anticipated in the maybe in the session like yesterday, where we saw the market showing signs of recovery. So there, I'm a little bit more disappointed. But from the index perspective, it's absolutely okay to have one day off for the Nifty, but a more powerful day for the Bank Nifty.
Okay. And Kunal, just in terms of the sector tilt among broader market sectors as well, what do you think does well?
So defense is something which you've been bullish on. If you remember, Harsh, I think we gave a
Yes.
call on many of the defense names last week itself, where we saw names like Masgaon Dock, HAL, Cochin Shipyard, etc. was one of the picks which I recommended yesterday also as buy calls. I would sense that now defense is moving into that second leg of price uptrend. So many of the defense stocks are now moving into a second breakout mode. Second, I call it because of the variety of time frame charts. Capital market is one theme which is looking attractive. So it started off with recovery in MCX almost like a couple of weeks back, and now it's moved on to other names. You see Motilal Oswal Financial Services, Angel One saw a good recovery yesterday. Today you're seeing the likes of CDSL making a very strong comeback for itself. So I would sense that other than the private sector banking stocks, we highlighted Kotak Bank, for example, a few days back, that it's one of the most stronger ones, could make a decisive comeback from the pack of the private sector banking names. Now, other than private sector banking names, if I have to take a consistent bet, I would believe metals, defense, as well as capital market as an overall theme could be something to look at.
Okay. Just very quickly, Kunal, your picks for this afternoon. How are you looking at stock-specific action?
So I'll go with a couple of buy calls. My expectation is that few sectors will continue to show signs of strength and outperformance. First one, which I'm suggesting as buy, is on Mazagon Dock. Again, going with the same theme of defense. Would look at 2,800 as a target. Stop us at 2,600. But one of the sell calls which I'll initiate would be on Bharti Airtel, the large cap name, which is actually showing signs of slight bit of a spring breakdown on the charts. So would look at a sell on Bharti Airtel. My expectation is that the stock can drop down to at least 1875 over the very short term. Stop loss to be kept at 1940.
Okay, we'll slip into a very short break, come back, plenty to speak about, including Kunal's views on Cyient in particular. That stock is on a tear this afternoon and in fact all through the day. We'll try and get a sense as to how he's looking at IT and Cyient in particular on the other side. Stay with us.
Back with closing trades, and the market continues to be slightly under pressure, but on the flip side, it's Cyient that is still holding on to some very strong gains and trading with gains of close to 7%. The company is targeting a significant expansion in both its addressable market and profitability as it moves from niche engineering services to what the management calls whole asset lifestyle engineering. Ashish is joining us with the Investor Day takeaways.
Well, yes, so Cyient held its investor day yesterday, and some important key takeaways that have come in from this investor meet. And first up, let's talk about the addressable market, where the management has significantly broadened the addressable market from about $100 billion in traditional ER&D currently to 2.4 to 3.5 2 trillion US dollars by including full engineering life cycle across 9 value chain stages. So this is the most important takeaways. They are expanding their portfolio, because of which the addressable market size has now risen. They've also spoken about DET, which is design, engineering and technology. That's their segment. EBITDA margins have already risen on a sequential basis in the first quarter to about 13.2%, and they are targeting 15% EBITDA margins for this segment by FY28 through AI-led productivity and SG&A optimization that is likely to come through. Now, they've spoken about their 3-year roadmap. They say FY26 was all about stabilization, FY27 is focusing on transformation, and FY28 will all be about scaling up their opportunities, and this is what they've spoken about their 3-year roadmap. Meanwhile, as far as their semiconductor business is concerned, they've outlined an ambitious plan: 4x revenue by FY31, 40% gross margins, and more than 20% EBIT margins for this segment. Brokerage houses, however, continue to remain constructive. We have Morgan Stanley, which says that they like the strategic initiatives that the company is taking, but they are not baking in any material near-term business change as a result of this, and they believe that execution is likely a key monitorable going forward. So yes, ambitious plans laid out by the company, but brokerage houses remain constructive.
Okay, Chicha, thanks for taking us through that. So those are the key takeaways from Science Investor Day, and the stock is up by about 6.8% as we speak. We're on the fundamentals now. Let's welcome on board Mr. Deepan Mehta of Elixir Equities, pardon me. And Deepan, hi, good afternoon. Good to be speaking with you. Give us your sense on how you're looking at the market in terms of how under pressure or largely sideways that we've been today. This was the same case yesterday, barring the last 40 minutes where we saw quite the spike up. Give us your sense on which sectors do you think could do well, because while PSU banks are leading from the front, IT today continues to be under massive pressure.
Good afternoon, and thank you for having me on your show. See, I think the broad market large cap indices appear to be flat, slightly declining trend, but there's a lot of action in small mid cap stocks, and the advanced decline ratios are generally very positive on most days. Investors' portfolios are doing well, traders are doing well, IPO market is doing well. So as such, I think a large group of players within the market, they have no complaints. The problem really is at the institutional level, especially if you're a large cap investor, where I think that absence of growth, stagnation in a lot of large cap stocks is resulting in this kind of a market where the hardly getting any returns from large cap stocks, although the valuations are attractive. So that's part A. Part B, I think that there's a fair balance between the positives and the negatives. The positives that being that the earnings season has been good, economy is in decent shape, and all the other parameters are fine on a fundamental basis. But we still have a ongoing geopolitical event. That threat remains, and that acts like a bit of a, I would say, barrier to going to the next level. And secondly, the liquidity. I think a lot of liquidity is being drawn out by the IPOs and the QIPs as well. So that's keeping mutual fund investment into secondary market on a slightly lower key. So basically, they're not chasing stocks. So having said that, I think that we can expect this kind of a sideways movement for a longer period of time. And eventually, we hope for a breakout of the Sensex and Nifty on the upside. And the trigger has to be the resolution of the US-Iran war, and of course, the concurrent fall in crude oil prices. Or then we should see massive FI investments taking place. Something has to trigger this kind of sideways movement to perhaps take it on the upside. But in the meantime, I think there's a lot of action in small mid-cap stocks, a lot of investors chasing many, many micro investment themes as well. And there's no dearth of interesting businesses which have got listed recently or now are nicely scaling up.
Deepan, I wonder how you're looking at Cyient, because that's one of the stocks in focus today. And what you make of the commentary, how realistic this 4x kind of revenue number, the 16% odd in terms of margins. I know the addressable market goes up, but how realistic is this?
Look at the track record. End of the day, management quality is summed up in the track record. And I don't think it's been that outstanding. Cyient, as I would say, is amongst the average or slightly below average in terms of returns, in terms of performance. What they've done over here is they have talked up the stock by saying that, this is what they're trying to do, and therefore the addressable market has gone up. But there are risks in execution over here. and it is not that easy. So I would say, okay, I mean, we keep it on our radar, but I would like to see solid, growth in the quarterly numbers, and then only maybe take a view on this company, because end of the day, numbers is what drives the stock price higher. And while strategy is good and targets are great, aspirations are fantastic, as investors, are you able to generate 17, 18% top line growth and 20, 25% bottom line growth? Because that's the basic bare minimum criteria for looking at investing in a company. And if you're able to meet that on a consistent basis, and there are certain very strong levers which suggest the longevity of these growth rates, then science certainly will be a great story. And not only will the earnings drive the stock price higher, but the street will instantly start paying a higher P multiple, and that also could be a like nice multiplier.
Kunal, I wonder what your view is with regard to the stock chart of Cyient and whether technicals indicate anything different.
Yeah, I think on the charts, Harsh, I sense that the worst now could be behind for Cyient because after such a kind of a steep correction from a level of 2000 when the stock was in 2024 till 720, 740, which was the I think a recent low for the stock a couple of months back. The carnage has been quite significant for the stock, and it now looks like with this price action today, what you're seeing for Cyient, it now looks like that maybe the worst could be behind for the stock price. And Cyient is such a chart that over the last, I think, 16 years, 18 years, approximately, you just look at the kind of movement the stock has gone through. There have been almost 3, 4 times in the span of the last 15 years where the stock has corrected by more than 40, 50%. So it's not that the stock is not accustomed towards sharp selling pressures, but it's just that historically we've seen that this is a stock which goes into a very sharp phase of rally, sharper phases of correction, and then another sharp phase of a comeback. I would sense that maybe a comeback of sorts could be in the making for Cyient on the long-term charts.
Okay, that's the take on Cyient on the charts. Deepan, some stocks from the broader end that are buzzing, they belong to the smaller private financiers, like an SPFC Finance is up 8%, Capri Global is up 7.5%, and you've got some more stocks from this pack that are doing well. How are you looking at this end of the financials basket?
I'm sorry, I didn't get your question. Are we talking about NBFCs or
We're
what
talking about
exactly?
smaller private NBFCs. How are you looking at them?
Smaller private NBFCs. I mean, see, there are NBFCs which are the way I categorize it, multi-product NBFCs, the likes of Bajaj Finance, Tata Capital, Cholamandalam, HDB Finance, Poonawalla Finance. Then there are the gold financiers like say Muthoot is there, Manappuram is there. Now IFL Finance gets a lot of its revenues from gold financing. Then there are the housing finance companies, and there are even within that also there are the housing finance companies which focus on the low ticket, the unorganized sector. So like that, there are many categories. There are the vehicle financiers like Shriram Transport is there, and there's Sundaram Finance. But on the whole, our preference is for multi-product NBFCs with usual disclosure that we have investment or have a client investment. And that's where I think that the business is far more, I would say, the diversification in the business, number of products they look at it, that provides a natural cushion in terms of the risk profile of the company. And all of these companies which are multi-product, especially like say Tata Capital, HDB, Bajaj Finance, Cholamandalam, I think they've displayed exceptionally good numbers last few quarters also. NPAs are also well within control, and management commentary is very positive. We do feel that the BFC space can grow much faster than the banking space per se. And I think investors who are looking to invest in the lending space should the best way to do would be through these NBFCs.
Deepan, within that basket, you spoke about multi-product NBFCs. How would you be looking at gold loan financiers? Because for the last couple of days, Muthoot, Manappuram have been doing well on gold prices edging higher. You've also had AB Capital that's announced its foray last week into the gold loan category. How are you looking at some of these names?
See, this gold loan business is now well discovered. And there was a time when Muthoot and Manappuram were available at very attractive valuations, but those stock prices also have gone up. And intense competition is coming within the segment from everybody, all and sundry, be it the banks, be it the multi-product NBFCs, be it new players like AB Capital. Recently, L&T Finance also did an acquisition. Tata Capital did an acquisition. So I think that is going to get a very, very crowded space. and that's going to eventually impact the yields that these companies are able to get. By yield, I mean the net interest margin. So I would be a bit cautious. As I said, if you want to have a large proportion of your equity within an NBFC, like, a part of a core holding, then you are best off in multi-product NBFCs. They can easily switch from microfinance to gold loans to vehicle finance to housing loans to consumer loans. So whichever segment is happening within the NBFC space, because they have a presence, because they have a customer base, and because they have distribution, they have collection, they have systems, they can quickly take advantage of the opportunities coming in that particular segment. Because I've seen this in the past. 2, 3 years ago, 4 years ago, microfinance was extremely hot, and then we saw what happened over there. Gold loan also, they come and go. Vehicle finance companies also, when the auto industry does well, they do very well, and then when things turn bad, then the NPS go up. So in my experience over the last 20, 30 years in investing in NBFCs, I realized that it's better to play safe and go with multi-product companies, so that whatever something they will do well for them, and they will grow. And you may lose out on a odd single type of a financier, like a gold loan company or a microfinance company or a two-wheeler financing company. But end of the day, I think when you look at a longer term basis, 3 years, 5 years, 10 years, I think multi-product NBFCs will give superior returns on account of superior performance.
And how are you looking, Deepan, at the larger lending space from some of the mid-sized kind of banks? A Federal Bank, you've seen decent run-up, right? In Federal Bank in particular, there's that linkage that they'll probably go out and acquire Jana, even though not sure, they've come out and clarified that they've made full disclosure as of now. But just having your sense of this entire re-rating that's played out in Federal, and could there still be some juice left in this one, and just in terms of both performance as well as re-rating?
Yeah, sure. I think there are 3 banks which come to mind, which we think can grow faster. And I will name them in the order of their capacity to grow faster, and therefore their attractiveness. One is the AU Small Finance Bank. I think they are doing great work, and their kind of qualitative and quantitative metrics is amongst the best within the peer group. Then there's IDFC First Bank also, assuming they don't have any setback on any front, then they also are poised to grow much faster than the industry. And Federal Bank as well. Federal Bank, of course, I think is amongst the cheapest of these 3 companies. So sure, I think, selectively within the banking space, there could be opportunities. These are not multi-bagger stocks, but certainly they can give returns which are higher than the Sensex, Nifty, maybe the peer group companies. So investors can certainly focus over there. But by and large, I think our view on the large banks, be it SBI, HDFC, ICICI Bank, IndusInd Bank, Axis Bank, remains quite neutral to negative. If you see their pre-provisioning profits for the June quarter, they are either stagnant or at best high single digit. And that doesn't interest us, because as I said at the beginning of the show, that we need 15, 17, 18% type of a top line growth, 20, 25% of a bottom line growth. And I don't think that the large cap banks can sustainably deliver on that criteria. So for us, a lot of large cap banks are a complete avoid.
Okay. Deepan, last one with regard to Seagull. I don't know if you track this one at all, Seagull India.
No, not really. All I know is that it is an engineering construction company. Unless something special is there in it and some development has taken place, I don't know. But by and large, these companies move on the order book position. And that order book position is growing for the entire EPC space because of infrastructure investment by the government, by the state. So sure, I think they're good investments. They have a good run, good trading rallies are possible. But end of the day, it's a cyclical sector as well. And one should expect a high degree of volatility in their quarterly earnings. And I would say again over here, the larger companies offer good risk return profile. I mean, see what's happening in L&T. Every now and then they are getting massive orders. Their order book position is growing significantly higher than their revenue growth. And I think that the orders which they are getting just now, they are at a much higher margin than what the averages they are reporting just now. So as I said, I think in some businesses you want scale. When you're looking at investing in other businesses, you want a niche. And then there are other businesses where you look for something special, something different which the company is doing, some mode, some brand, some technology. I don't know where Seagull will exactly fall in it, but there are so many EPC players that we need to be a bit you know distinguish which is the winner over there, and that's quite difficult.
You like Deepan? Any names you can throw at us?
As I said, L&T is a great play. I
Perfect.
think with usual disclosure, it should be part of every investor's core portfolio amongst the few large cap index company which can grow at that 14-15% type of a top line growth. Then another company which comes to mind is Adani Group company Sem India. It's run up significantly in the last year or so since the Adanis have taken it over. But then that opens up a massive opportunity for the company in terms of projects from the group itself. Again, disclosures, of course, at every stage, our views are biased. We are invested in it. These are not recommendations. These are just our, stock ideas. And then there is VA Tech Vabag, which is the third company which we have invested in. And VA Tech Vabag, what we like is a nice niche within the water space. There are quality players over there. And again, the kind of order book to sales ratio is fantastic. And they are in tough markets, be it the Middle East, be it Europe, and in India as well. And I think that again, there's a company which can grow much faster than the average EPC company. So when you look at EPC, you look for scale or you look for a specific position or opportunity, like as is the case of Sem India, or you look for niche players like Viatech Vabag, because water is extremely important globally, and they'll keep governments will keep making investment in water projects, and that will benefit a company like Viatech Vabag. So it's better to be in such businesses than just pure road construction or pure construction of office buildings or factories, which is like a very standard business, which is not that high margin business. So we prefer companies which have a niche and a strong position in a slightly difficult infrastructure segment, because that I think can generate higher returns than a kind of a me too EPC player.
Okay, understood. Deepan, thank you so much for your time today, and thanks for sharing your views with us and our viewers.
Thank you.
Thank you. On that note, viewers, time to slip into a very short break. We'll keep the conversation going about the way the trading session has shaped up so far, and more importantly, what to look forward to for the rest of the week. On the other side of this short break, stay tuned.
Welcome back. And, sugar, that's been one theme which has, worked over the last week or so, whether up or down. Today, we're seeing a bit of a correction in some of those sugar names. But sugar supply concerns are now spilling over into retail, with quick commerce platforms imposing purchase limits. You have Blinkit, Zepto, and Swiggy. They've restricted sugar sales, while DMart has also introduced quantity curbs. Kuldeep gets us more details on this one.
Well, amid the supply shortage of sugar, the quick commerce platforms have imposed some restrictions on the purchase of sugar. What we have learned is that quick commerce platforms such as Blinkit, Zepto, and Swiggy Instamart have capped the purchase of sugar per brand. In fact, if we talk about Blinkit, so on Blinkit you can purchase 5 kg sugar per brand. That is the cap they have imposed. And talking about Zepto and Swiggy Instamart, so you can purchase 2 packets of 1 kg each per brand on Zepto and Swiggy Instamart. So this is the development that has been in the aftermath of, as we know that there has been supply shortage, and the prices of sugar have been increasing consistently over the past couple of weeks. And in fact, not only quick commerce platforms, what we have learned is that even the retail outlets such as DMart has also capped the purchase of sugar because of this supply shortage. If we talk about the prices of sugar, as per the latest government data, the prices in Bombay was at 70 rupees per kg, while in Chennai it was also 70 rupees per kg. And in Delhi, however, the prices of sugar are quite relatively less when we compare with Bombay and Chennai. In Delhi, it's around 65 rupees per kg, while in Kolkata, it has been reduced to 69 rupees per kg. Remember, yesterday, the prices of sugar were somewhere around 71 rupees per kg in Kolkata as per the government data. Now it has come down to 69 rupees per kg. If we talk about ISMA's statement, ISMA have been quite optimistic that in the coming months, in the coming days, in fact, or before the festivals, they are quite hopeful that the prices of sugar will come down. And in fact, to control the prices, the government has also, as we know, approved duty-free import of over 10 lakh metric ton of sugar.
Okay, Kuldeep, thanks so much for taking us through that. So that's the latest development in terms of how quick commerce companies are grappling with the shortage and spike in sugar prices that we're seeing. Shifting focus then, let's talk about a stock that's doing decently well for itself in trade. It's a 2.25% uptick on Vedanta Aluminium Metal today. And the stock is in focus after Motilal Oswal has maintained a buy call with a target price of 540 rupees per share. The stock close to 450 right now. So that's a significant 90 rupee upside that the brokerage is setting for this stock. Mitali is joining us with more on what makes Motilal bullish on Vedanta Aluminium. Mitali.
Rightly mentioned, so Vedanta Aluminium, Motilal Oswal retain its buy stance on the stock and has given the target price at 540. Upside of nearly 21% that Motilal sees in the stock. Now, Vedanta Aluminium appears to be entering a significant earnings upcycle supported by higher capacity, stronger raw material integration, as well as improving their cost efficiency. Now, the smelting capacity it is expected to reach around 3 million tons by FY28, translating into approximately 6% annual volume growth for the company. The ramp up of the Sijimara Mali bauxite mine alongside rising captive coal production should reduce the reliance on the external supplies and help the company bring down their input as well as the logistics cost. Management is targeting a further 9 to 12% cost reduction, with the hot metal cost expected at around $1,550 to $1,600 per ton. The earnings outlook is also quite strong, with EBITDA projected to rise nearly with 18% CAGR growth by FY28, and at the same time, the value-added products are targeted to increase to 59% to around 90%, supporting margins as well as the realizations. So that's the take coming in from MOSL, and they quietly remain bullish in the stock. And yes, you can see that the stock has been in positive momentum in today's trading session.
Okay, Mitali, thanks so much for taking us through that. So that's Motilal Oswal's take on Vedanta Aluminium, and lots of brokerage action is something that we've been seeing from the get-go. There was a very bullish note coming in from the House of Macquarie on some QSR stocks as names, some upgrades, some target price. And on the back of that, names like Devyani, Jubilant, Sapphire, they have been doing well in trade. But let's also shift the focus and let's bring on board Mr. Nagaraj Shetti of HDFC Securities joining us on the technicals. Of course, Kunal still continues to be with us. Nagaraj, hi, good afternoon. Good to have you on board. Give us your sense on how the charts are shaping up for the Nifty versus the broader end of the market, and where are you seeing more upside potential in the next 1 or 2 weeks?
Hi, good afternoon, Snehi. Thank you for having me. Nifty has been in a consolidation phase since morning. I think the overall chart pattern is still positive. I think high tops and bottoms is intact on the Nifty and the daily as well as weekly time frame chart. And recently we have seen a formation of higher bottom. The bottom is intact and currently facing resistance around 24,400 levels. So it's a consolidation phase. 1 or 2 days we could see Nifty bouncing back and moving above the hurdle of 24,400 and 500 levels in the near term. So more upside likely in the near term after the consolidation phase.
Okay, how much of an upside, if at all we were to hit 24,500, then what next, Nagaraj?
Around 25,000 is going to be the next important resistance once
Okay.
it sustainably moves above 24,500.
And what sectors? What's your sector bias?
I have 2 stock sector. I think defense sector, banking, PSU banking, metals, and even hospitals, healthcare sector is looking positive.
Okay, and your stocks, Nagaraj?
I have 2 stocks for alongside. One is Dredging Corporation. This is a mid-cap stock. After a correction, it has bounced back very well from the lower levels around 1100, formed a higher bottom, currently trading around 1130 levels. The overall chart pattern is looking positive. One can look to buy at current market, and the immediate target would be around 1190, and one can place a stop loss at 1100. Second one is from a realty side, Centec Realty. After a bounce back, the stock has reacted slightly down in today's session and consolidated at the hurdle somewhere around the 315, 316 levels. The overall chart pattern is indicating a formation important reversal pattern. I'm expecting a decisive breakout in the near term. So currently trading around 312 levels, one can look to buy at 312. The immediate target would be around 330 and one can place a stop loss at 305.
Okay, those are the two stocks that Nagaraj is liking at the moment. Kunal, coming to you, two stocks from the pharma pack that are abuzz today. One is, of course, Cipla. US FDA has inspected the manufacturing plant at Pithampur and come out with 7 observations. On the flip side, Lupin is in focus. They've won the ruling on Vertex patents for cystic fibrosis drug, and that's a positive coming in for Lupin. How are you looking at both of these names on the charts, Cipla and Lupin?
Believe our bullish charts. The Cipla, I think, did recently well. The stock moved up from 1400 levels to 1500 mark, and now it's corrected back to that 1400 starting point of the rally. So, which means price-wise, I think Cipla is at an attractive price juncture. Lupin has already gone through a decent correction. I think the stock went through almost like a 10-12% plus correction, has come back sub the 200 moving average. I would believe both of these stocks are looking attractive at the current juncture, and the risk reward is attractive for traders to look at a fresh buy into this name. Look at it this way that the entire pharma sector has been doing very well. And within pharma stocks, you have two formidable names which are available at almost like a 10% odd kind of a discount with respect to their swing highs. So I would believe it's a good time to try and nibble into these stocks, specifically from a medium to long term perspective.
Okay, that's the take on Lupin as well as Cipla on the charts. But on that note, Kunal and Nagaraj will continue speaking to us on the other side of this short break. Viewers, stay tuned and we'll be right back.
Welcome back, and we of course have with us both Nagaraj as well as Kunal. Nagaraj, any of the gold financiers looking interesting to you at this point?
Yes, gold finance, I think Muthoot has done very well recently, bounced back sharply from the lower levels. Currently, just moved above the 200 DM in the last 2 sessions. The overall chart pattern is looking positive and attempting to move above the consolidation phase. Currently around 3,215, I think more upside is likely in the short term.
KPI Global in particular, 8.5% move. How is this one looking like on charts? Kunal, that one was for you. KPI Global.
Okay, I understand. So KPI Global, I think on the short-term charts, we're looking at this stock trying to come back into a recovery. Last, I think 3 days or 4 days, we've seen a 20% kind of an up move from 220 or 210 levels. The stock has come back towards 260 mark. It's a good breakout, exceptionally strong volumes, looks quite attractive. However, I think may not be the best time to try and purchase the stock because of that. What happens is if a stock runs up in a matter of 3 or 4 days by 20% odd kind of a uptick, the indicators tend to get overbought. So maybe buying on dips could be a better strategy. Say a 5% kind of a correction could be a good starting point from current levels. Say somewhere around 245, 250 could be a good starting point.
And with regard to Seagull India, Nagaraj, I wonder if you have a view there.
I didn't get you. Sorry, I'm not tracking right now, Rajnish. I won't be able to comment.
Oh, okay, understood. Kunal, would you have a view with regard to this one? 4.5% move, and it's been a stock where every time you have an order win, it moves up. So I'm trying to get a sense as to whether there's an opportunity here on charts.
I think it's a decent chart, Harsh, Seagull India, because I remember, I think, discussing about the stock, I think a week or two back also. So what's actually happened is that the recent low for the stock in 2025 was around 250 mark for Seagull. The stock jumped up to 400 and then followed by 2 months of consecutive price corrections. In the month of July, the stock corrected around 10%, 12%. The month of August, the stock prices had corrected by another 7-8%, but we've recovered to now being almost like 1.5% down only for the August month. So in the effect of doing that, it's formed a bullish hammer pattern. Technically, very bullish on the charts. I mean, on the stock price. I would expect the stock to maybe potentially come back to that 400 levels in the next 2 to 3 months. So near to medium term time kind of a time frame, I think a decent 20% upside could be seen into the stock price.
Okay, that's the technical view on Seagull India and back-to-back order wins for this company for the last 3 to 4 days. In fact, more details on that order along with a list of all the other buzzers in trade. That's what Meryl is joining us on the show with right now. Meryl.
Right, so these are all of the stocks that we're seeing in focus today. Starting first with Moltech Packaging, the company has approved a 1:1 bonus issue and has also recommended a final dividend of 3 rupees per share for FY26. And this is why the stock is in focus. Seagull India has appeared as the L1 bidder for a project from REC Power Development, with the project carrying an annual value of 608 crores for a 35-year period. And in an F&O related development, we've seen a bunch of stocks in focus. These are Bank of Maharashtra, Ather Energy and Sagility. This is coming in as and the NSE has added these stocks to their F&O list effective today, the 26th of August. This has led to higher trading activity and liquidity in the stocks, including institutional inflows that we'll see going out from today onwards. So this is why all of these three stocks are also buzzing in trade today.
Meryl, thanks for that. And if we could just have these three stocks on air, this plate, Ather Energy, Bank of Maharashtra and Sagility India, on the back of F&O inclusion starting today. Just take a look at Bank of Maharashtra. It's almost higher by 5%. Sagility India is up 3%. Let's break down all of those stocks and get individual views from our technical experts. Kunal, let's start with you. Bank of Maharashtra. I remember we've been discussing this stocks for some time, but 5% uptick on Bank of Maharashtra today. 85.5 is where it is at. Are you spotting further runway on the charts?
I do so, Sneh, because what's actually happened is that now Bank of Maharashtra is one of the very few banking names of course on the PSU side, which is actually confirming breakouts of their swing resistances. So recovery after every price correction, consolidation, and then a further leg of a breakout on the upside. These are classical patterns which we look out for. So like what we discussed earlier, much earlier, I think for the stock price, when I remember, I think Bank of Maharashtra was somewhere around 55, 60 odd range. Even from that kind of a time frame, the stock looks attractive. Currently also, I would be bullish on Bank of Maharashtra.
Okay, the bullishness continues on Bank of Maharashtra. The other two stocks in focus on the back of the F&O inclusion is Ather Energy as well as Sagility. Your view, Nagaraj, on both of these stocks, how are they shaping up on the charts?
Yeah, first from Sagility has bounced back very well from the lower levels. Structurally moving up, higher tops and bottoms is on the cards, and today it has declined a bit from the higher levels, but overall chart pattern is looking positive. More upside is likely for the Sagility. And second, for Ather was moving in a range bound action. It has made an attempt of moving above the range. It has been rested at the 2010 and day EMA. The overall chart pattern is looking very positive for this, gradually moving up over the last few months. Higher tops and bottoms is also on the cards. So more upside likely for both the stocks, Ather and the Sagility for the near term.
Okay, that's on Ather as well as Sagility. But the other stock in focus, and we've been talking about this from the Pharma pack, is Lupin. This stock is in action after it won the 4-year-long patent case filed by Vertex. This victory clears the path for its genetic cystic fibrosis drug, and Meryl is joining us with more details and how positive this could be for the stock. Meryl.
Is in focus today after it's won a 4-year-long litigation against Vertex Pharmaceuticals. This is over its drug Calideco. A US court has rejected Vertex's infringement claims and has cleared the way for Lupin to pursue its very own generic version of Calideco. And the legal battle dates back to July 2021, when Vertex first sued Lupin after receiving notice of its ANDA filing and its intent to challenge the 481 patent. Vertex then expanded the litigation in May 2023, and the cases was subsequently consolidated with litigation along with Sun Pharma's case as well. Now for Lupin, this is a positive development from a complex litigation and US generics perspective, and the company has already received the appropriate US FDA approvals for its Calideco oral granules generics. However, the commercial upside coming in from this approval may be limited. This is given the declining sales that Vertex has already seen in this drug. And as this is more of an older version of the drug, Vertex has already released a newer and much improved drug that's called Trikafta, which remains the dominant franchise in the cystic fibrosis segment for Vertex as well. So this used to be a blockbuster drug for Vertex initially, but that is now reduced. The sales of that has now reduced and gone towards Trifecta. So the potential revenue opportunity that Lupin may be looking at is going to be a little bit limited. And however, it is a meaningful legal win, but the near-term commercial impact, if we look at it only from a numbers perspective, is a bit limited for Lupin today, and that is why we're seeing modest up moves in the stock today.
Meryl, thanks so much for putting that into perspective for us. That's on Lupin. Before we slip into a very short break, just want to highlight another stock that's seen a sharp uptick in the last few minutes, and that's Tata Steel. The Supreme Court has quashed the tax demand penalty order of 1,781 crore rupees against the company. They've issued notice to Tata Steel, hearing the returnable on October 5, 2026. And this Supreme Court notice was for the hearing for case against the state of Odisha. So positive for Tata Steel, and we've seen a turnaround in that stock and a sharp spike in the green, 1% uptick over there. We'll get a view on some of these metal names on the other side of this break from our experts, but stay tuned and we'll be right back.
Welcome back. You're still tuned into Closing Trades right here on ET Now. And on the show, we now have Mr. Sunil Subramaniam, market expert, now joining us. Kunal Bothra is still with us. Mr. Subramaniam, let me come back to you and let me talk about the IT sector first. Given the kind of correction that we're seeing in the index, yes, we did see some bit of rebound after TCS and the kind of management commentary that came in post their results. Your sense on the IT sector, and would you recommend to perhaps accumulate positions as far as IT stocks are concerned?
Not really. I think it's a trader's play. It's a recommend for accumulation only if you have space in the value part of your portfolio. I don't see IT as a growth pack, and all these corrections and bounce backs. I think from a trading perspective, it makes very good sense because there's a good degree of margin of safety now with the kind of correction that's taken place. But whether that's going to lead into a bounce or is it just a dead cat bounce, I think it's very hard to say. Very news flow driven. So from a trader's perspective, see the moment there are some US stockbrokers, some analysts who comes and rates it up, it'll move up. Somebody else will rate it down. AI will come up with a new threat. So there's going to be a lot of volatility in this segment. So it's a fertile ground for a trader to enter with book profits and stop loss and enter and exit. But on a longer term, medium term perspective, I don't think there are clear-cut answers yet on how the IT sector is going to meet the AI challenge, the business model change challenge, and all of that. So I would say that if you feel that you need a margin of safety in your portfolio, right, then to the value component, you can add it. Similarly, if you're attracted by the dividend yield and you're somebody who's an income seeking, and there are many FIs also like pension funds who are in that space and who will keep buying at these dips. So I would say reasonably a floor is there in IT, but it's not a growth. It's not something where you can expect maximum capital appreciation. So I would be cautious if you're looking to add it from that perspective.
Okay, so don't expect capital appreciation as far as the IT sector is concerned. That's the view coming in. But Nagaraj, let me come to you and your view on IT stocks. Mr. Subramaniam was just talking about how it is a trader's play. Your technical view on the index and some individual stocks from the index?
Yeah, view is not that great for the IT sector. Still, it is showing some consolidation. We have seen some significant bounce back from the lower levels. After that, it shifted into a consolidation. TCS, let's take a look at last 4-5 sessions moving in a range-bound action. Nothing has changed so far. I think some more consolidation is likely. I'm not expecting a bigger decline from here onwards, but some more underperformance is likely in the IT, prominent IT stocks for the near term.
On that note, Nagaraj, thank you so much for your time. Good to speak with you as always, and thank you for your views today. Shifting focus then, viewers, public sector banks. So remember, Nifty PSU Bank is the top gaining sector as we speak, and public sector banks have submitted a set of recommendations to the government for developing a long-term financing model for strategically important projects aligned with the vision of Viksit Bharat 2047. Prakash is joining us with all of those exclusive details.
Well, sources tell us that public sector banks have submitted key recommendations to the government to develop a long-term financing model for strategically important projects, a very significant development. In fact, the recommendations have been made to the Finance Ministry. to meet financing needs in line with the vision of Viksit Bharat by 2047. These recommendations were discussed during the recently concluded PSBs Manthan and submitted to the Finance Ministry, which include developing a pipeline of bankable projects. Sources also suggest that public sector banks seek a government-backed structured project screening mechanism to identify strategically important projects. Development of standardized DPR and credit enhancement mechanism for critical projects were part of the deliberations. It also suggests that efforts should be made to encourage participation from institutional investors, and there is a need to develop a unified RFQ mechanism to improve price discovery. In fact, recommendations have also been made for innovative financing solution by banks and other financial institutions where it intends to develop diversified asset pools through acquisition of financing models. These key recommendations were discussed during the recently concluded PSBs Manthan and submitted to the Finance Ministry.
Okay, Prakash, thanks for taking us through all of those details. So yes, PSU banks have been in focus since the get-go, and that's the latest update coming in on that pack of the market. Mr. Subramaniam, hi, good afternoon. How are you looking at the Nifty PSU bank index? Do you believe that the PSU banks are much better placed in terms of a return potential compared to large private sector banks, or would your view be different there?
Yeah, it depends on the time frame that you're going to choose. If you have anything like a 18-month outlook, I agree with your stance. The reason I mentioned an 18-month outlook is because immediately if you see, and if you look at the quarterly earnings numbers and the disclosures, the private sector banks have been a bit ahead in terms of their, NPA levels, the management and all of that. Public sector banks have got the benefit of a CASA book, and on the fundraising side, they are better off. But the coming season is a festival season, and you're going to see a lot of discretionary consumption, consumer durables, auto, all of these sales pick up. And private sector banks and NBFCs are much in a better position to convert those into business. So the credit growth that's anticipated during the festival season would actually go to the private sector banks in a larger market share. So public sector banks will come into play when the capex cycle gets going, and which will be, I think, its green shoots are there, they're starting, but they will catch up with a bit of a speed, I would say, from early next year, right? From 2027 onwards. So in that, they have a very good market share because a lot of the capex is financed by SMEs and MSMEs, executed by them, the order books. And their financing, I think the private sector banks would stay away from. They have not had a good experience there, whereas public sector banks have decades of experience in lending to the SME, MSME segment. So they would grab good market share and good NIMs there because these smaller companies don't have a good bargaining power. So the rates of interest on their loans will be very high, and public sector banks would enjoy the benefits. So you need to be a bit patient. So you're building a medium-term portfolio, 18 months plus, let's say up to 5 years. Public sector banks are an excellent bet because in addition to what we just discussed about the recommendations made to the ministry to help them do their jobs easier, right? A lot of those. I expect also mergers on the public sector banks to be a big part of the agenda. Probably in the coming budget in February, you will see something because we need to globally scale them. So all of those things are very, very positive for the public sector banking space. But keep in mind that in the near term, private sector banks might outperform in terms of EPS growth and the stuff like, but it doesn't mean that public sector banks are bad, but it'll take a bit of time for the true potential to be displayed. So have a medium-term view, and I'm positive and bullish on the Nifty PSU Bank index itself.
Okay, so that's the view coming in on several of these private sector banks. But let's also put the spotlight on Ola Electric. That is one stock which is up 5%, although there is no fundamental view or technical news that is leading to this kind of rally. But Kunal, your thoughts on Ola Electric at 38 currently? What do charts suggest for this counter?
Well, I think it's an avoid, Ashisha, because I think the stock is too much of a high beta, too volatile. There are far better names in the two-wheelers and the four-wheelers back in fact, in the auto sector as such, which have done very well. Look at what Ather has done in the last, I think, 3 months or 4 months. The stock has gone up more than 20-25% or more than that. TVS Motors has come back towards a fresh lifetime high above 4,500 plus mark. Bajaj Auto is on the verge of hitting a lifetime high. Hero MotoCorp has recovered quite smartly in the last 2 months or so. So I would probably concentrate on the more formidable ones rather than a very high beta stock like Ola Electric.
Understood. That's your preference when it comes to the two-wheeler space. But let's refocus. And in fact, we have about 7 block deals that are on focus today. And a big change of hands is something that we've seen. And that has triggered sharp moves in a bunch of stocks. Mithali is here with the details on each one of them. Mithali.
Right, so 7 block deals happened in today's trading session. Thousands of crore rupees exchanged their hands and some sharp moves coming in if you see on the streets as well. So let's start first with Welspun Corp. A massive 1433 odd crore rupees of block deal happened here involving around 2.4% equity exchange. The promoter as well as the CEO stake sale triggered a 5 to 6% of decline in the stock, even as the stock remains up nearly 179% on a year-to-date basis. Moving on now to Physics Wala. So around 550 odd crore rupees worth of shares changed hands, or roughly 1.6% of the company's total shares. Interestingly, the stock has jumped nearly 5% despite the large block trade after gaining over 63% during the past 6 months. Also, Grow, that stock is in focus, a whopping 2,500 crore rupees of block deal representing around 2.1% of the equity weight on the stock. Shares were quietly under pressure in today's trading session with Ribbit Capital among the sellers. Also, moving now to Weir Scientific, so around 1390 crore rupees of deal happened in this stock, representing more than 10% of the company's stake. The stock has fallen about 5% or more than that, making it the biggest proportional stake transfer among these names. Rubicon Research also saw nearly 1.3 crore rupees or 7.85% of equity stake change. But unlike most of its peers, the stock was up in today's trading session. Also, Avenue Supermarts or D-Mart saw around 69 lakh shares or 1.06% of equity changing hands, with the stock coming under pressure after this block deal happened. And lastly, Hexaware Technologies also saw a block deal of around 0.93% of equity trading in a block deal. The stock was relatively flat after this block deal was reported.
Okay, so several block deals that have taken place today. Mithali, thank you for joining us, and we'll of course have the details of buyers and sellers later today evening. But let's put the spotlight on some of those. Physics Wala, that stock is up 4%. On the flip side, we have Grow, and that stock is down 3.5% in trade today. Kunal, your view on both these counters, Grow and Physics Wala?
Yeah, I think Physics Wala could be something more of a trading opportunity over here. The stock seems to be bouncing back from 120 levels to 126, where the stock is trading right now. So it looks to be more like a trading bet, can head towards 134, 36 kind of a level. So not too much optimistic on the stock price, but yeah, from a short-term trading perspective, another 3%, 4% upside is what I would look at. But Grow could be an interesting bet from a medium-term perspective. I think the zone of 185, 195 for Grow, I think, has been a good support zone for the stock in the limited chart history. So short-term wise, I would believe Physics Wala can see another 3-4% kind of an upside. But I think Grow could be a good accumulation between this zone of 185 to 195.
That's the take on some of those stocks. Mr. Subramaniam, wanted your view on how you are looking at the defense pack right now. Yesterday, we had the news that DRDO is going to be sharing its technology with some of the private defense players. And today, you've got names like Data Patterns, that's up 5%, Cyan DLM, Paras Defense, Mishra Dhatu, all of these defense names are doing very well. While the index, however, on an overall basis is absolutely flat. How are you looking at defense as a space? And do you believe that this is a basket that our viewers with slightly long-term horizon should be looking at? Is it a constructive long-term play?
I think it's a constructive long-term play, but I'd make 3-4 points about it. The first is that the defense index is the not right way to look at it because it's dominated by the PSUs, whereas I think the future lies in the hands of the private sector. So I would argue that you should build your own defense portfolio of 15-20 stocks, but give a weightage, I would say 55-60% to the private sector as opposed to the public sector, which is diametrically opposite the index. Second is that I'm very bullish on the future, but the problem is a lot of the bullishness is in the price, and those valuations are not cheap. So clearly, you've got to be a very long-term player. I would argue that you have to go up to 7-10 years holding period to really, get a further uptick, because the future growth is not going to come from valuation operating. It's going to come from actual EPS growth, which will come through. And the reason I also stress that is because the execution timeline for their order book, the order books are very healthy, excellent, but execution timelines are anywhere between 3 to 5 years. So you've got to give them be patient with them for them to execute. There's no downside risk, but the risk of delay in execution remains. The fourth thing is that I think the reason I also mentioned the private sector, because while this DRDO transfer, all of that is very good, the real future lies in exports. Because most of the countries now, NATO, because Trump is withdrawing his hands from NATO, the other emerging market, the UAE and the other Gulf countries, all are building up their defense arsenal. And in the new age warfare, I think in Operation Sindoor, Indian defense companies showed how the modern day warfare like drones and UAVs, they are doing very, very well. And these are the kind of things which will be needed by the world at large. So I see a huge export boom. My sense is we could even hit 75 to 80,000 crores in the next 5 years in defense exports. So if you can also tilt into those kind of companies which are geared towards these kind of products which have a good export potential, rather than just rely on the government order and the domestic execution part, I would say that will be a better place to step in. And finally, I would say that keep about, if you have an allocation for defense, keep about 10 to 15% as cash. The reason is, one, that there would be volatility and correction because of the high valuations. When there is sector rotation happening, this is an easy spot for the DIIs to step into, to book profits, to go into other positive sectors. So there will be volatility along the line, number one. Number two, I see also a huge pipeline over the next 3 to 4 years of newer companies coming to list in the market in this space. So keep some firepower ready with you in your allocation to buy those names as they come for listing.
Okay, so that's the view coming in on several of these defense stocks. Remember, the entire basket was in focus yesterday and will continue to remain in focus over the next few days. But shifting focus then, India added 1.3 million credit cards in the month of July, up 11.5% on a month-on-month basis, taking cards in force up 10% YOY. HDFC Bank led card additions, followed by SBI Card, while PSU banks continued to gain spending share. Mithali is now joining us with the highlights from this.
If you see the India's credit card market, it has continued to expand in the month of July as well, with card additions and the transaction volumes growing faster than the overall spending. Now, the credit card trends for the month of July, if you see, so cards in circulations, they have risen up by nearly 9.9% on a yearly basis, while the banks added the new cards in July around 1.26 million, which was up 11.5% on a monthly basis. If you see the transactions volume, they have also seen quite a surge for this month. Transactions volume, they have jumped by 24.5% yearly, but the average transaction value, it has fallen by 14% to around 3,440 rupees, pointing to more frequent but smaller ticket purchases. Now, looking at the graphics for credit card spendings, if you see, so overall spending, it stood at 2.08 lakh crore rupees, up 7.4% yearly and up 3.4% on a monthly basis. Now, if you look at who added the most cards for the month of July, so HDFC Bank has led that pack by adding 2.3 lakh cards, followed by SBI Cards and ICICI Bank. Also in the list, we have Federal Bank as well as IDFC First Bank and Axis Bank. But IndusInd Bank was an exception, with its card base declining by around 9,400 for this month. Now, if you see over the 12-month additions, there also HDFC Bank seems to lead the pack. Over 12 months, HDFC Bank has added 2.1 million cards, followed by ICICI Bank at 1.64 million and SBI Cards at 1.5 million. Also, if you see the PSBs gain is also spending the share. Now, PSB credit card, they have the spends there have risen by 22% yearly, taking their share to now 22.2%, up 265 basis points, while for private banks it accounted for 1.5 lakh odd crore rupees with a 72.1% market share. So overall, the credit card adoption, it is actually growing faster than the spending, while the PSP, public sector banks, they continue to gain around in the credit card market.
Okay, Mitali, thanks so much for taking us through that. So that's the kind of, that's a roundup on the credit card spends that we've seen off late. Kunal, let me come to you. The cash session is underway now. That's a closing auction session. We're seeing some moves coming in within the Nifty pack. It's JSW Steel, Eternal that are both higher by about 0.2%. I'm just taking a look at ICICI Bank, Aisha, Bharti. Kunal, am I seeing it right? Is there a 3% fall on all of these names in the cash session?
Yeah,
Yeah?
staying, I think the first 5, 7 minutes, it acts a little tricky. The
Sure.
premium for the Nifty jumped up to almost 200 points. So that's another icing on the cake.
Absolutely. So we're going to be revisiting the kind of moves that we're seeing in cash right now, because the screen right now for some of these names, ICICI Bank is lower by 3%, Bharti Airtel lower by 3%, similar cut in Sun Pharma, Adani Ports, Asian Paints, Aisha, Bajaj Finance all seeing cuts of 2 to 3%. So yeah, that's just the volatility that we're seeing in the first 6 minutes of the cash session that have been at play right now. We'll try and revisit all of these names in a couple of minutes as well and see where they have stabilized for the day. But Mr. Subramaniam, let's talk about telecom. Bharti Airtel as of now, of course, under pressure. But how are you looking at Vodafone, a stock that was at a 2-year high yesterday and did really well? What's the outlook on telecom? And of course, now with Jio also trying to list sooner or later, how do you think that is going to impact the listed telecom players?
No, I think that the telecom story is good. The story of penetration, the story of their increasing the RPUs, the pricing also will be going up. Overall, the telecom space is in a good space, I would say. And Geo coming to list is not going to make much difference in terms of the ground level action, because their business models are very clear in terms of how they approach it. Bharti has a higher RPU and looks at profitability, and Geo is looking at mass market share. That positioning is very clear. Geo's listing is also going to be that they're putting it as a platform rather than as a pure telecom play. So the pricing, the P ratios that there will be different. But you coming to the overall space, I think that these two players are going to dominate. So Vodafone as a player is going to be a highly a trading play. I mentioned this about something else earlier, right? About IT. So very similar to that, because Vodafone is never going to be getting market share over these two players. Their muscle is just too strong at the ground. Their network, their investment. I don't think Vodafone is just coming out of its troubles. It's not going to be able to invest at any kind of the levels that the other two do. So in a kind of it's a 2.75 player industry, right? Those two players are sharing in most of it. There's only 1/4 of it, which is there with the Vodafone player. So I would say if you're investing in it, you always go with the leader and the challenger. But the third player is always going to be left behind. So broadly, from an industry's oligopoly characteristic, I would say this. But then, like since the industry has a good tailwind ahead of it overall in terms of penetration and increasing data usage across the country, you will see that there are trading opportunities will be there in stocks like Videophone, which you should play, again, like I say, book profit, stop loss, enter, exit that way. So otherwise, I don't want to talk about any specific stocks here, but like I said, the leader and the challenger are both should be in your portfolio. The third one should be largely a trading bet.
Okay, so that's the view coming in on several of these counters. But Kunal, let me come back to you. And I'm sure we've discussed metals, but again, your thoughts on a couple of these movers: Hindustan Zinc, SAIL, Vedanta, all of them gaining anywhere between 4 to 6.5%. Your thoughts on these stocks?
Yeah, the metals are definitely shining, Ashisha. So I think it's a good sign that metals are finally making a very good comeback. In fact, last week I'd given a buy call on many of the metal names. We started off with Hindalco, Nalco being one of the stronger ones, followed up by JSW Steel. Very recently, I think last couple of days back, I'd been bullish on Tata Steel, and now that stock has started to start to move up higher. I would sense that I think we're looking at a big metal rally coming back. So look at it this way: start of 2026, when the entire narrative of the US-Iran war was going on, metals was one of the formidable sectors which had done very well for itself. Then, when the markets bottomed out in the month of March and April start, is where metals started to go into a correction. And the degree of correction for many of these metal stocks was around 20%, 15 to 20% broadly for large cap metal stocks. And now these metal stocks are making a comeback for themselves. So I strongly believe that I think we are looking at a point where the entire metal rally or the metal sector has sort of turned around, and we could be looking at many of these metal stocks either trying to reclaim back their previous lifetime highs or swing highs, or many of these stocks coming back into breakouts and covering up the underperformance. I think it's a good sector to be participated into. One stock which I think from the metal, not exactly from the metal pack, but from the commodities theme, which is given a breakout today, is NMDC. That stock around 86, 87, 88 levels where it's trading right now. I think it's also something which starts to look very attractive, and specifically given almost 3-4 months of a consistent underperformance the stock had been through.
That's on metals. And I'm just trying to revisit some of those nifty names that were heavily under pressure when the cash session took place. Aisha is still lower by 2%. Maruti, SBI Life, Power Grid, these are some of the stocks that are still heavily under pressure. What really stands out is the fall that we've seen in Nifty 500. If we could pull up the chart for Nifty 500 on an intraday basis, remember for the better part of the trading session, you had more than 300 stocks that were in the green, with slightly lesser number of the stocks in the red right now. Nifty 500, you can see that sharp fall in the chart that we're speaking about right now, lower by about 0.5%. And right now we're exactly at even Steven, 250 stocks in the red and 250 in the green. That is what the advanced decline ratio is looking like right now. However, in the last about 11 minutes since the cash session has been underway, it's Bajaj Holdings that's higher by 2.25%, IDBI Bank up 2%, United Spirits, Premier Energies, Max Financials. These are some of the names that are doing well. And what continues to be under pressure on the flip side is Aisha, like we were talking about, along with Radico, Khaitan, Sun Pharma, Petronet LNG, Jindal Steel, LTM, Lodha. All of these stocks are seeing cuts between 1.5% to 3%. Kunal, a quick view on Bajaj Holding and IDBI Bank. Did you track these stocks on the charts? Because they're seeing a little bit of an uptick in the cash session.
Bajaj Holding is interesting, Sneha, because the stock in the last, I think, few days had gone through a consolidation, moved in a band of 11,700, 600 as a resistance, and 10,900, which was the swing low the stock had made, I think, yesterday, 10,800 to precise. The stock made a low yesterday on the monthly closing expiry. So I think now you're seeing recovery of sorts for Bajaj Holding. Looks attractive as a chart setup. I would sense that maybe over the next couple of days, the stock may consolidate a little, but it should be ready for or getting up for a breakout above 11,600, 700 mark. So short-term trading wise, over the next maybe a couple of weeks, the stock should be good for a breakout above 11,700 plus levels.
700 plus levels, that's the target you need to keep your eye out on as far as Bajaj Holdings is concerned. But we were just talking about metal stocks with Kunal, and Mr. Subramaniam, let me come back to you with respect to your thoughts on the sector, especially something like Hindustan Copper. That stock is now up 4% today. Copper prices in the global market have been surging over the last few days, with copper now above that $14,500 per ton mark on London Metal Exchange. Your thoughts on the entire play? I understand that there is this overhang of OFS and the fact that the stock fell 7% yesterday. Hindustan Copper and your view on the entire sector?
My view on metal sector, I agree with Kunal that I'm bullish on that. And the reason for that is completely different. Individual metals could have their own dynamics going around. But I believe that the whole, US debasement of the dollar with the yields rising at the longer end is, I think, a positive for hard assets. So whether it's gold and silver or other metals, I think they are in for a good time, because when your financials of the US and all are looking a bit, not shaky, it's too strong a word, but definitely there are concerns around the extent of US debt, and over the longer period, you're seeing those yields being very, very sticky. It's positive for the hard asset pack, and metals being a part of it, I think they are in a good space on that. The other reason also from a fundamental perspective is whenever the Gulf War ends or whatever, there's a huge rebuilding exercise that's got to go on. And I think those infrastructure related play will mean that a lot of metals are needed through infrastructure, right? Copper, aluminum, ferrous metals everywhere. So I think if you have a medium term outlook, it's a good space to be in. But then it's probably one of the most volatile sectors in the stock market. So I would urge you all to take a staggered buying approach here in this, because the volatility will then can be translated in your favor.
Thank you for that view. On that note, we will let you go. Just taking a look at how the cash market is wrapping up for the day. We're low by about 0.5% on the Nifty. 24,207 is where we're at. We've lost significant ground from the get-go. ICICI Bank slightly in the green, 0.5% uptick. Ultratech Cement continues to do well. I'm just taking a look at what's happening in the broader end of the market, and we seem to be under pressure over there as well because the advanced decline ratio is now absolutely in the middle. You've got Varun Beverages that continues to be the top loser in the Nifty 500, about a 4% cut after its foray into alcohol. That's the announcement with no further clarity, and that is something that the brokerages have not been liking. Tata Com is down 3.3%, Grow also lower by 3.25% on the back of multiple block deals. It's Jubilant Food, despite a price upgrade coming in from Macquarie. That stock continues to be under pressure. Premier Energies, Allied Blenders are some of the other names. On the flip side, SBFC Finance continues to be a big outperformer, 9.3% higher on that one. Jindal Saw towards the day's end has seen quite the spurt, 8.25% uptick over there, along with IDBI Bank. Cyient continues to hold on to gains of about 7% on the back of their lofty FY31 goals. Capri Global continues to gain as well. Anthem Biosciences, Hindustan Zinc, SAIL, Ola Electric, Physicswala, Bank of Maharashtra, all of these stocks are doing very well in trade, seeing gains between 5 and 9%, and this is something that is actually keeping the broader end of the market slightly cheerful, although we are seeing cuts of about 0.2% on the broader end. To sum up the day on the cash front, Nifty 50 is lower by about 0.5%, 24,207 is where we've shut shop, and of course the F&O trading continues for another 10 minutes, so we are going to be watching out for that as well. I'm just trying to revisit what is happening within the Nifty 50 group of stocks and what has happened in the cash segment, because if I take a look at the sectoral winners and losers, all the sectors dipped into the red in the cash segment, and we've seen mild gains coming in on JSW Steel, Coal India and Kotak Mahindra Bank in the cash. Other than that, there have been cuts on Tata Steel, Max Health as well as Bharti Airtel, along with Tata Motors PV, and that is the kind of construct that we've seen at the Nifty 500 level on the cash segment. However, if I take a look at the sectoral gainers and losers in cash, the biggest cut of about 0.5% is something that we've seen on Nifty Auto, followed by Realty, Defense and Pharma, with Energy, PSU banks and FMCG being absolutely flat, and this I'm only talking about since 315. This is the kind of move that we've seen. Kunal is still with us. Kunal, give us your view on Nifty Auto. Some names like Tata Motors have been in focus earlier in the day. How are you looking at the Nifty Auto segment? Because in terms of the sectoral move also today, Nifty Auto has ended with cuts of about 0.7% overall and still lower by 0.4 in the cash. So what's your view here?
Yeah, I think auto index is something which I would believe gradually will start to look a little bit more attractive. But Tata Motors, frankly, if I talk of Tata Motors PV, has been an underperformer. The stock, I think, has been now on the verge of testing the 300 mark. Slowly and gradually, we've seen Tata Motors PV to try and lower the base. Earlier, the base on the support was around 400 levels. Then it came down to 350, and now the stock is trying to land up closer to 300 mark as a support. So it's been a stock which has clearly disappointed. Tata Motors CV, on the other hand, I think has been a good stock to look at. The stock has been trending up higher. It's managed to break past above previous resistances of, I think, around 400 and 450 thereabouts. So I think Tata Motors CV is something which I would believe continuously looks to be an attractive chart. Autos as a larger basket, I would still believe that it's better to buy stocks which are on the higher degree of momentum, because then the waiting period for these stocks is far more lesser, as well as the probability of these stocks moving up higher even after a phase of a pause, like what we're seeing in the markets overall, is pretty much on the higher side. So TVS Motors continues to look attractive. I would probably believe even Bajaj Auto, Hero MotoCorp to a larger extent is something which looks attractive. Ashok Leyland, I think something which we don't speak of too often. That's also from the Auto Pack, which has confirmed a breakout above 180 mark. Looks to be a very attractive proposition over the near-term trading perspective.
So that's the view on a couple of auto counters, but let's also talk about a few energy stocks, Kunal. Siemens, Adani Green, Tata Power, NTPC, all of them under pressure. Any thoughts on any of these counters?
I think Siemens could be interesting. The stock, I think 2 days back, had shown a 4-5% up move. The stock was confirming or on the verge of confirming a breakout for itself from the pack. I think very recently, when you look at the price moves for power names as such, Power Grid last week, if I'm not wrong, I think Friday had a fantastic up move, 4%, 5% up move for the stock price. But the problem with many of the other traditional power names, the likes of Power Grid, NTPC, Tata Power, etc., is that the stocks have lacked follow-through approve. So there are 1 odd days, 2 odd days when the stocks move up higher. But then when you don't see any too much follow-through on the upside, it becomes very difficult for the stocks to convert those bounces, those intermittent rallies into any kind of a major trend. So I would not be too much bullish on the likes of NTPC, Tata Power, Power Grid on the short-term chart specifically because of the lack of conversion of the bounces into any kind of a near-term trend. But I think if I have to pick up, something, Siemens could be something which I would probably look at, specifically with the last weeks of price rally the stock had seen.
That's the take coming in on some of those names. Some other names that have done well in trade is a CE Infosystems, Navin Fluorine, Hindustan Copper. After that overhang that we've seen of the OFS was up about 4%. Vedanta has done well, as is the case with Dalmia Bharat and NMDC Steel, along with Sham Metallics. In fact, all of these belong to the metal basket and they have done well. On the flip side, it's more names like Cohance Life Sciences, IRB, LIC Housing Finance, DV's Labs, Gland Pharma that have done well. Kunal, earlier in the show, we were speaking about two names on the chart, Cipla as well as Lupin on the back of that patent approval. But other than that also, it's Gland Pharma, DV's Lab that have both seen gains of about 3.25% today. How are they shaped up on the charts?
Yeah, I think Divi's Lab is a different chart altogether, Sting. I think the stock has done exceptionally well in the last 3-4 months. It's rallied up more than 40-50%, moved up to that 2000 plus mark, whereas I think end of 2025, start of 2026, or maybe the first couple of months, the stock was struggling at the 1400-1500 zone. So I think Divi's Lab has done very well for itself in this last, I think, few months. It looks like that the stock has suddenly gotten into a renewed kind of a vigor in terms of price uptrend. Gland Pharma is also a very similar kind of a chart. When you look at this over the last 2 years, 3 years plus kind of a time scale, the stock had been beaten down more than 70-75%. If I'm not wrong, I think the low for Gland Pharma, the low I think 2024 end or 24 mid somewhere is where the stock had hit 700 or 800 levels. And from there, the stock is now trying to recuperate and come back to that 2000 plus mark. So it's a stock which I believe is more like a work in progress. The recovery is quite strong. Volumes are being seen in phases when the stock moves up higher. That's generally a very attractive proposition because when stocks go into a sharp correction, traders, investors, they lose interest. But when the stock recovers, if you see volumes coming back into phases, but then the price recovery sustains for the stock price, that's generally considered to be bullish sign. So Gland Pharma, I think over the medium to long term, could turn out to be a very attractive chart. DV Slab is already attractive at the current levels and has been doing very well for itself.
A couple of these Vedanta group of stocks were also doing very well for themselves in trade today. Vedanta Aluminium, for instance, up 3.5%. Vedanta Oil up a solid 7.5% in trade today. Vedanta Power was up more than 1.5%, and Vedanta Limited itself was up more than 4.5%. Of course, much a part of this was because of the broader rally that we saw in metal stocks today. But Kunal, your view on any of these counters? I understand that they got demerged recently, so perhaps you will not have that chart history. But despite that, basis the limited view that you have.
So yeah, Ashisha, as you rightly pointed out, the chart history is limited, difficult to categorize a view into many of the other Vedanta group of names. But it's a classical theme over here. When a stock gets demerged, gets broken into many other entities. Initially, there is kind of a value correction into the stock price, where you see the group companies, going into a very gradual correction. Sometimes you see 10%, 20% correction. Sometimes you see more of a time-wise correction. I think Vedanta has gone through that kind of a correction, both time-wise as well as a price-wise correction. And now these stocks are starting to make a comeback. So I'm not tracking the other group of Vedanta names, but Vedanta traditionally as a metal stock is something which I strongly believe looks extremely attractive. Sometime back last year or start of this year, calendar year, the stock adjusted the prices, of course, was almost at 700, 750 mark and had more than doubled in a span of, I think, 6 months prior to that. So after a steep and a phenomenal uptrend for Vedanta, the stock went that in a special situation. Now I would sense that the stock looks fairly attractive at the current juncture with the entire metal rally and the metal theme trying to make a comeback.
Kunal, as we wind down for the day, give us your sense on the kind of sharp move that we've seen on the Nifty. In the last couple of minutes of trade, we're ending lower with a cut of about 0.5%, 24,207, so barely held on above the 24,200 mark too. Come Thursday, this is going to be the first monthly Sensex expiry under the CAS mechanism. Kunal, how are you looking at the Nifty? First, your thoughts on the way we've closed for the day and what the next 2 trading days in the week could hold for us.
Yeah, Sneha, I think it's more of a few hits and few misses for the markets today because, on one hand, the Bank Nifty did pretty well for itself, but the Nifty, I think, could not show any signs of encouragement or holding on to the higher gains. 24,200 is where we've closed. Largely, we are stuck into a range for the Nifty. So, as a trend, it's extremely difficult to categorize. It's almost like 51st or the 52nd day. We were discussing this point yesterday also that it's almost like 50, 51 days when the index is consolidated. We add up one more day to this patch of consolidation for the Nifty. Now, the only interesting part which I'm actually looking at, which I'm keeping an eye on specifically, is the India VIX. So we were at 14, we'd fallen down to 12. Recently, we were almost at 11.5 on the India VIX. Now we are at 10.5 for the India VIX. So that's, I think, is one thing to watch out for. And frankly, I think if it falls below 10 mark or 9 levels for the India VIX, that's where I would believe that the markets should come back into a bit of a inflection point. So I think that's the indicator to watch out for, because when you look at the index movement, the sector specific movement, the large cap stocks, nothing much in terms of a trend.
Close to a 5.5% cut on the India VIX like Kunal was highlighting, and we're just around that 10.5 mark. Kunal, on that note, thank you so much for taking the time out and speaking with us today, and we'll reconnect with you tomorrow. Thanks so much.
Thank you.
Okay, viewers, with that, we're completely timed out on this edition of Closing Trades. And on the other side of this break, we'll bring you a special segment, Commodity Central, where Ashesha has spoken to Mr. Ajay Kedia from Kedia Commodities to decode the latest copper trends and everything that's going to be playing out in that market. Catch that conversation on the other side of this short break.